Hi, my name is Akash. I'm a stock market and commodity market trader. So today we are going to see about the stock market basis in which we are going to see how a company is getting listed into the stock market, what is the process for that, why a company wants to list into the stock market, what is the benefits of that as well, and as an investor, what are the things you should look at it into the fundamental analysis. If at all you want to be a day trader, you need to have the knowledge of technical analysis. We will be showing you live examples with the live trading of buying and selling of shares in intraday as well. And what is an intraday? If you don't know that, also you'll be learning over there. So there are many concepts we are going to cover into this course. Now, starting with an example, let me assume a business called Tea Time, which was started by three business owners. So, while starting into the business, they had few branches. They started with one single branch. The business was going good, and they started another branch. The business was going good because they had 12 rupees for the tea, which is a premium. Customers were also coming to that shop. Even the normal peoples were also coming to that shop. Now the company is running good. Now the company is thinking that they want to expand their business, so due to which they need money. So they want to spread their branches to all over across India, which is pan India, or they want to cover any particular region like South India, North India, due to which they need money. So where they'll be going for the money? They can either go to the bank, in which they can ask for loan. In return they have to pay an interest for that, or else they can go to some investor who might be his friend or his family member or angel investor who are ready to invest into Tea Time. Against the investment, the company has to give the shareholding percentage to that particular investor. Giving an example, let me assume the Tea Time is asking for 10 crores in return of 2% of the company's shareholding, by which he will be an partner into that company. So this is the second way where a Tea Time can go and raise the money from investors as well, for which he did not even want to pay any interest. And the next he can do is he can go and list his company into stock market. Before that, against the company, against the angel investor is paying the money, the company will be giving him shared certificate. The share certificate will be written that this particular investor who has invested into my company is holding the particular percentage of shares into the company. Now coming back to the topic, share market. If at all the company wants to list into the stock market, then what the company has to do? The company has to get approval from the SEBI by listing into the process of IPO. So IPO is the process by which a company can get listed into the stock market. So IPO will be approved by SEBI. If at all the IPO is approved, then the company can go and do IPO, which is called as an initial public offering. About IPO we will be seeing later. So the company has to go with the process of IPO, which will be approved by SEBI. By then only the company can issue the IPO to the public. Now once the public has subscribed to the IPO, it might be like, let me assume there are 10,000 crores shares are given by the company, out of which in IPO the people are subscribing, sorry, the peoples who are subscribing, they have subscribed almost around 50,000 crore. So what will happen? This is multiple times of subscription has happened, due to which only particular peoples will be able to be getting the allotment of an IPO. About the IPO we'll be saying in the upcoming topics in detail. Now once the company has got the money from the IPO, now he will be having good amount of money in order to expand his business. After the business expansion, what is the benefit of the shareholder? As an investor, the benefit will be share will be appreciating, then you will be getting good amount of money as a profit, and you will be also getting a dividend. If at all the company is giving the dividend, then you will be getting the dividend. About the dividend is like an additional income for you from the as a shareholder. Let me assume share price is 100, the company is giving 2 rupees as a dividend. So what happens? Once the company is giving a dividend 2 rupees per share, then the share price will now go to 98, and it will be starting the price from 98 now. So this is how the dividend works. And now coming to the split happens when the share price is very expensive. Like an example, let me assume a share price is now trading at 10,000 rupees. So it is not easy for every investor to invest into that stock because each share price is 10,000. So not everyone will be participating into that, due to which liquidity will be very less. So that the company now wants to split its share to 1 is to 10. 1 is to 10 means now 10,000 shares will be 1,000 rupees per share. So he is dividing his share into 10 parts. The person who is holding one share of 10,000, now he will be holding 10 shares in return of the split. So what will happen? So 1,000 rupees share will be given into 10 shares. So let me assume the company is having 10,000 crores of shares into the public, into the stock market. After going 1 is to 10, now what will happen? The share will be 100,000 crores of shares will be there, because it is multiplied into 10. So that is how split works, which is majorly done when the company share price is very expensive, due to which it wants every retail investors or everyone to be able to invest into that company, due to which the company will be having a good liquidity. Now coming to the bonus part. Now company will never ask you additional amount in return of bonus. You need not have to pay any additional cost to that, which company gives to you as a shareholder. Now giving a quick overview, company issues share in order to raise the capital. Company receives money from IPO, right? Once the IPO process is done, then after few days the company will be listing into the stock market. Now company uses funds raised to generate more revenue, right? And the shareholders will make profit if the share price is getting appreciated. They can sell the share and they can make the profit. So this is the process, how a company is getting listed, why the company wants to list into the stock market, what is the benefit of the company, what is the benefit of the shareholder, what are the shareholders will be getting in return of investing into the share. So not each and every company is giving dividend, not each and every company is giving bonus. It is some companies which are giving, which is called an dividend stocks. You can go into Google and search for dividend stocks, due to which you can invest that in order to gain the dividend benefit. Now coming, this is an share certificate which was on the date of 16th day of March, 16th March 1995 at Delhi. So we have taken this from a Google image, in which you can see a share certificate has a name, right, has a number of that share, and number of shares are there in this certificate, what is the share price. So these things plus the chairman signature, the managing director signature, the authorized signatory, so which person is authorizing for this share. So each and everything is mentioned over there, and back of which you can see this is what is given, in which you can see if at all you want to transfer any share to anyone, so you can write the name of the share and write the name of the person whom you are transferring, the date, the transfer number, each and everything you have to mention over here. Now what is the process? Now the process is totally digital, which is called as a demat process, demat account, in which your shares are physically reflected, not like share certificate. Because on those days what happens, people used to have share certificates, but some might lose it, some might forget where they have kept, so there are many things will happen. So due to which now, not due to that only, but as in digital India, the digital process is demat account process, which is a very easy settlement process happens nowadays, not like previous things. So just for a reference, I'm saying you what was happening in the previous times, what is happening right now, so by which you can get an understand, okay, there are many changes into the stock market, even into the shares allotment as well. Now coming to the capital market, in which there are two markets, primary market and secondary market. Primary market means it is an IPO market where you can just buy the IPO subscription of that company, which is called as an buying stock. You can take it and in simple words. So this IPO will be reflected in your demat account, and this is the purpose of the IPO. So company might wants to do business expansion, the company wants to reduce the debt, the company wants to do operation cost, due to which the company comes with an IPO to the share market, by which after few days it will be getting listed into the secondary market. Now coming to the secondary market, in the secondary market you can buy and sell stocks, and you can have a trading and demat account. So stocks has demand and supply. So demand and supply, you can understand, like if at all the share price is having a good demand, and there is also good supply which is happening in the secondary market. So it is not like an illiquidity, there is a good liquidity when there is a demand and supply in the secondary market. Now coming to the detailed explanation of IPO. IPO is an initial public offering. It is a process by which a private company becomes public. It is very simple in order you to understand. Before company is getting into the IPO process, the company will be in private. Once the company is going to the IPO process, then it will be becoming public, because in share market the shares of the companies will be in public, right? Due to which it will be a public limited company once the IPO process is started. The exchange IPO are listed in NSE and BSE. So IPO is like an, you can give an example of lottery as well. Why I'm saying this as a lottery is, you have a particular date of period of time in which the IPO will be opened, and there will be an issue date as well. So investor can apply in this IPO during that time only, not before or after. Now coming back to the lottery part, see, let me assume the company is bringing 100 shares into the public, I mean sorry 100 shares into the stock market. It is a very small number I'm giving you, but in just in order to understand you, okay, only 100 shares the companies are there into the stock market, they are coming into the IPO process. But people who have applied, it has become 1000 shares people have applied, so which is called like an oversubscription. You need to subscribe, and there is an oversubscription into that, due to which now 100 shares are only available, right? So from that 1000 shares, 100 shares will be only allotted, so which is called as a lottery kind of part. It is not a guarantee that you will be getting the IPO subscription will be allotted to you. Now coming to the lot size, most probably, I mean highly, the share allotment price will be, I mean the IPO lot size price will be around 14 to 16,000 minimum. So this is the minimum to maximum price. So what does that mean? Means, let me assume T time is coming into an IPO, and it is bringing the share issue price as 100. Now into the quantity which will be done is based on the company share price will be, I mean the allotment, the IPO price will be between 14 to 15,000 maximum, or 14 to 16,000 maximum. So 15,000 divided by 100, then you can do is, what you will be getting is 150 shares you will be getting into that IPO. So there is a lot size which is particularly there when an IPO is coming. A company share can't be like 16,000 per share, 17,000 per share when it is coming into the IPO process. So any multiple will be given, and it should maximum should be is only 14 to 16,000, not more than the amount. Now issue price is also said to be the price per quantity share. Issue price of the share is equal to face value of the share plus premium asked by the company on the share. So by this, what you should understand in a simple ways, the company comes always with a face value. It might be any number, like giving an example, 10 rupees is the face value. Now plus what is the company is issuing in the IPO? The company is issuing at 50 rupees. So now what is the premium amount? 40 rupees is the premium amount. So right, because the face value is when the company started, during that time the company's face value was 10, but now the company has given an enormous growth, the company has given some expansion, the company's valuation is something different, due to which the company can't give the same face value